Hello, this is the coach from winnings.coach.com. I'm going to talk to you just a little bit today about another indicator. It's called the Williams Percent R, and I'm going to talk specifically on how I use the Williams Percent R to assist me in my trading. Now, one of the coolest things you're going to find about the Williams Percent R is it is the best indicator to use when identifying a bottom. We all want to be getting in at the bottom. We want to sell at the top, and our Williams Percent R is going to give us an indication of that bottom. So let's take a look here at a couple key values of the Williams Percent R. First off, we have the value of -20, which is our top line. Typically, as the Williams Percent R crosses the -20 line, you begin to experience some higher volatility in your stock. But it's this bottom line that I'm interested in the Williams Percent R for, and this line's value is -80. Now, as you cross the -80 line on a stock, you will find that you are typically getting the indication of at least a short-term bottom being put in on your stock. And I'm going to go through here and I'm just going to kind of mark a couple of these crosses, and you'll see that in a couple areas, like with any indicator, nothing's going to be 100% accurate, but I want you to look at how many times it is accurate. And it's those times that it is accurate that makes this worth following. I'm telling you right now, if you trade on indicators, the Williams Percent R is going to be one of your best indicators to follow for swing trading, especially because that bottom, those swing traders out there know that that bottom may be followed by a little while of consolidation, where the momentum trader, the shorter term trader, may not have the same interest in holding the stock for the time that it'll take, and they may be more interested in the upper level of the Williams Percent R, which we'll talk about momentarily. Now, as you can see from the 80 cross, which I've marked throughout this chart, and we'll even go back over here, you can see that your entrance based on that cross has accurately predicted a bottom play that, whether it be for one day or for several days, has proven to be profitable on your chart. Now, with the Williams Percent R, I use the setting of 10 that works on a 10 moving average period. Even though I do a lot of longer term trades, the 10 gives me that little shorter term feel, and it's my preferred value to use for the Williams Percent R. Most of your brokers, most of your charting software out there will have Williams Percent R on it, and as you can see from my lines here, we'll go ahead and show how every one of these bottoms actually warranted you a profitable opportunity. No matter how big or how small that profit might have been, you were given a profiting opportunity by trading the 80 cross on the Williams Percent R. And one of these just happens to be a trade we're in right now, September 2013 on NTEK. And as you see, my alert followed exactly on this 80 cross, because the chart NTEK, I trade it specifically on the Williams Percent R. Now let's look at that volatility zone. The volatility that occurs as the Williams Percent R crosses above the -20 line. And you'll see that this is when your candle sizes just happen to get a little bit bigger. You get a little more movement. Your percentage gain increases. Now, for a momentum trader, momentum traders might only want to wait for this time to come and simply trade the volatile time of the stock. But a swing trader wants to be in it before it gets volatile. A swing trader is generally going to hit a higher maximum gain potential on the stocks they follow because they will be in it already as that bottom approaches, or as the volatile time approaches from getting in it off of the bottom. And as you can see, we haven't alerted our sell yet in NTEK because we're just now in our volatile zone, playing off of this 0725 and 075 buy-in point, all based on our Williams %R indicator. Now, with the -20 cross, you'll see in specific times like this right here, and like this right here, our Williams %R was extremely accurate in giving us the measure of volatility. If we're expecting that measure of volatility, we do need to be patient, however, and wait for the Williams %R to cross above the -20. Now, a lot of people will look at this indicator and say, oh, my indicator's topped out. It's, doesn't have much room to go to the high side. I don't want to buy it up here. But for momentum traders, shorter term traders, this is the area of the Williams %R you do wish to trade, because that's the time which produces your biggest candles. This is the coach from winningstockcoach.com talking to you tonight about the Williams %R and how it is the best indicator for predicting bottom bounces and a very, very good indicator for predicting your high side volatility.